Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Hope you guys had a good weekend. I appreciate all the good feedbacks on the over the weekend video. But let's look at this. Let's look at this market here and trying to figure out what we can expect going into tomorrow, potentially remainder of this week. Market gaps up today, finishes the day about 1% gain there, but it looks like we gapped up, and then pretty much all throughout the day we've been grinding lower, and the last hour we did see that ramp and we did print new all-time high today at 342.96, as you can see on the S&P 500 there. And you know, if you've been following me last several months, been watching my daily videos, you know that we track gaps because gaps are important. It is no coincidence today where we found support right in the gap area, right? It is no support in early August. We found support right in the gap area. It is no coincidence or no mistake. We found support right on the gap area. It is no coincidence or mistake. We found support right in the gap area in early August. And you can see just in the month of August, we opened up 1, 2, 3, 4 gaps. And we've been tracking these gaps. We've been talking about these gaps. We talked about how, and you know, these lines, these support lines, you know, I've been putting them here and here. You guys remember when I was doing these analysis back in early mid-August, and I've been increasing them and putting them here now at 341 and 339. But this is why it is very, very important to track gaps, because if you want to see any kind of early signal of this uptrend weakness, would have been at least bears coming down filling these gaps, at least one of them. So let's say you see right here, it looked like we're gonna make new highs, and then it kind of rolled over, and then we actually saw a gap down. This was what day was that? That's the 20th, right? Last week. When we saw that gap down, instead of finding support right on that gap area, it would have been better for the bears come fill this gap and kill the momentum from that up gap, and then probably gonna bounce because we got gap filled, and then we have midterm moving average there, and then potentially move higher a little bit and then cultivate lower a high. But this entire month of August, that never happened. Every single gap, that gap support has been holding and bounced. Gap support held and bounced. Gap support held and bounced, held and bounced. Gap support held and bounced. And when you start to see something like that, you want to continue to give benefit of the doubt to the buyers. And you know, before this trend can be dismantled, what you usually see is you start to see even you can see it here. You know, this is kind of a similar scenario when we are analyzing the market back in April and back in, you know, late April and May, right? So there was that island gap which never got retested, never got filled, which was very bullish signal. And then we saw this gap, right? There was that gap. You see this gap back in April 22nd? That gap never got filled. Bears came down trying to retest that gap here. They failed to fill the gap. Here, they failed to fill the gap. And what happened? We saw another gap open here, right? This was back in May 15th. And bears trying to come down, fill the gap, but they failed. We found support at the gap area, right? There's another gap open here, and then it marched higher. Few gaps did get filled back in mid-June when we saw that 8% correction. There's an island gap, and there's a small gap that did get filled, but this gap never got filled right here, right? And this gap never got filled. And where do we find support? Right in that gap area. So you can see right here, right? It closed here. On the next day, it gapped up. And bears did bring it down on the same day, but failed to fill the gap entirety of it. And then later that became strong support. You see that right here? That's exactly same level. It is no coincidence we came down that level. And the bears never able to fill that gap, but left that gap open. It came back down to hunt them later. I mean, bears, right? Because bears trying to fill the gap here that failed, that made the market move higher, and bears came down pretty hard mid-June, was not able to fill that gap, and then bulls brought it up again. Bears came down again near to the gap area, was not able to fill the gap. There's a 3 attempt to fill the relatively small gap here, I think. That gap was never filled, and even today, this gap still remains open. That gap still remains open, right? This gap open. And then we had some zigzagging move here, but at the time, what we're doing, we were, following my midterm moving average, which has a pretty impressive resume, right? It acted as resistance there in mid-June, and then it acted as support here, and then resistance here, and then a support here, and then a support in, and then all of a sudden, when the market made a higher high for the first time after the June correction, it cultivated another higher low. We talked about this back in early July and late June. This was a very, very important signal. Market is now preparing to resume back to the upside. And ever since then, market continues to what? Cultivate higher lows and higher highs. If you look at this as a stick shift, you're driving a manual shift. First gear, it's very jerkier. Second and third gets a little bit jerkier, but it goes faster. And a fourth gear, the jerkiness is not as much, and the price goes faster, and higher. And as you can see, that pullback is not as steep. You can see there are little pullbacks now, right? First gear, second gear, third gear, and fourth gear. And fourth and fifth gear, you know how smooth that, whenever you change that gear, you barely feel that jerkiness in your car because it gets smoother and the car goes faster. And that was the analogy that I was using throughout this move here. And we're back here, right? So you can see that as soon as that gap got open, we had to give benefit of the doubt to the buyers. I did tweet things out earlier today, I think last hour, and my oscillator is actually crossing down, but I also noted that we are finding support in the price. So this is why you don't want to look at these things too closely, because oscillator can whipsaw back and forth. We saw it here. We're seeing it right now. So if I zoom in to that oscillator, you see it got whipsawed because towards the last hour ramp. If this would have came down, filled the gap, we would have seen a full cross, and that would have been bearish going into tomorrow. But we didn't see that. We saw that this thing kind of crossed initially, but we just gotten right back up here. You can see they're separating. So they got a little bit more room to move to the upside. We're not seeing that full cross there, right? That's why you always want to look at the price. Price is all, the oscillator is always the subordinate to the price. Price is always the king. Price is going to what pay us, right? Price is what matters, right? And price is always right. Price is always right. Market is always right. So we want to continue to respect the fact that market is up here at 342. And we want to continue to respect the fact that we're on an uptrend. We want to continue to accept the fact that market is making new all-time highs. I think I said this on the weekend video. I'm going to say this again before I let you guys go. Is that there has never been, not one time in the history of stock market, where you see the market goes down, we see a steep correction. We're talking 30%, 25%, 35%, right? More than 20% or something like that. And then that, we're talking, 25, 30, 35, something like that. More than 20% corrections on the S&P. And then if that price goes back up, right, and makes new all-time highs, when this occurs in the stock market, on the S&P 500 specifically, we've never seen where in that same year, S&P 500 comes back down, either come back to that March lows or making new lows. That has never happened. So if you're trying to bet on this happening, you're trying to say that this time is different, quote unquote, this time's different scenario, you're going against the odds. Obviously anything is possible in the stock market, man. Just like your life. We live every single day, every minute of our life, knowing we don't know what is going to come next hour. You don't even know what you're going to eat tonight. Oh, that's given. Obviously, nobody knows what the stock market, that's given. So what we have is a probability. You can kind of give yourself probability what you're going to eat tonight because you can kind of I can look at your behavior last 1 year because maybe right now is summertime. So in the summertime, on Monday night, I'll gather all the information, what you usually eat, and I can kind of come up with the probability of what you might be eating tonight, pizza or steak or whatever. I can have a good probability what you're going to eat tonight. Right? But then I look at your past historical data and I never see you eat hot Vietnamese soup on Monday night, on summer day. That never happened. I'm going to say we have a very, very low probability you ain't going to be eating that soup tonight. You see what I'm saying? You could. I don't know. Maybe that low that's true. Obviously, man, anything can happen. But what I'm saying is that's what draws people to casino. They know the odds are against them. They go anyway and they are broke, right? All those people going after jackpots, buying these lotteries, their entire life. What are the odds of winning a lottery? They say you have a better odds getting hit by the thunder lightning, than you winning a jackpot or something like that, right? I'm not going to go after those kind of probability. So what I'm saying is this. In the history of stock market, when you see the market goes 30-35%, goes all the way back and print new all-time highs, there has never been, not one time in the history of stock market, on the same year, where that market comes back down and make new lows, and we get into a bear market or something like that. Has never happened. Maybe it happened a couple years later, but not on the same, not even next year. You know what I'm saying? So that's not where you should be betting on. But at the same time, you have to know, which I explained, I've been explaining quite a bit on the weekend video, how to navigate this extended market. You can go back and check, but it's at the same time, you do not want to chase up here. Not heavily anyway. Nothing, you know what I mean? Because NASDAQ just did about 70-some% move from the lows. S&P like 60-some% move at the lows, straight up in just 4 or 5 months. So unless you're extremely, extremely long-term, you're willing to hold things long-term, you're okay with some drawdowns, 10%, 12%, 15% corrections. If you're okay with it, you're willing to buy more, that might work. Right? You're extremely long term. You really believe that this market will be bullish for the next several years, maybe 5 years, and you're okay to buy some stocks up here. And then, nothing aggressive, nothing like call options or nothing like leverage ETF, but you're willing to accumulate some shares and some of these stocks, maybe some laggers or something like that, or maybe even some of the leaders, but you think to yourself, okay, you know what, I'm going to buy some here, and then when we do see some 10-15% correction, if you're okay with that, and you say, I'm going to just accumulate more at the time, and you're okay with that, that might work. Again, only if you're a long-term investor, but you're a short-term trader, you're trying to swing trade or something like that, it's not going to work. Trying to chase this, trying to short this, it's not going to work. People been trying to short NASDAQ for the last couple months, and they all been getting wiped out. So I'll let you guys go. Come back tomorrow. We got a little bit of room here for the bulls, right? If they want to utilize that, they could still push a little bit, keep grinding higher. We've been talking about how this is a very, very rare signal where my 60-minute chart oscillator oscillating at the top of his band entire month of August and late July. That has never happened. That just tells us how adamant this market is, how bullish this market is, and market can keep grinding higher like this for very, very long time. Your job is to manage risk. Your job is to stay disciplined and sharp. Look for the next opportunity, but I would not recommend chasing this if you're not already in it long, or shorting this either unless you're extremely short term. So come back for you guys tomorrow night and we'll go from there. Enjoy your evening and good luck trading tomorrow.